added income streams that aren't requiring a ton of my time. As we all know, our time is the most valuable thing that we have. So I just try and maximize capital without requiring as much of my personal time.
You're listening to the Real FI Podcast, where we discuss time-tested tricks, techniques, and strategies for pursuing financial independence today, so that we can enjoy a better tomorrow. A better tomorrow. Financial independence isn't about getting rich quick. It's about cultivating a foundation to grow financially, mentally, physically, and spiritually. Let's figure out how to kick the 9 to 5. Here are your hosts, Patrick and James.
Come on, guys. Welcome back to the Real FI Podcast. You got myself, Patrick McGrath, and my co-host here, James Rippion.
How's it going, everybody?
And today we got a really exciting guest, one of my long-term best friends, and someone who's on a wonderful financial independent journey right now. My good friend, Justin Hill. How's it going, Justin?
Good, guys. Thank you for having me. Excited to share some knowledge and have a good conversation with you guys today. So thanks for having me.
For sure. So we like to get started by just getting to know you a little bit better. We want to know you as a person, like where you started, maybe not like where you were born and raised, but what you did for a career, maybe where you went to school, what you did throughout that time as a younger person, younger professional, and kind of how that developed into the person you are today and what your pursuits are. So why don't you wind back the clock a little bit and tell us a little bit about yourself?
Yeah, absolutely. So starting, we'll jump in, we'll stay where I was born and raised, but it was where you guys are from in Maryland. Went to a school called Towson University. To a college just north of Baltimore. I studied business management and entrepreneurship there. I double majored there. Really learned a ton about just mainly in the entrepreneurship track, to be frank. The business management track could probably condensed in like a year, in my opinion. But I've learned a ton of great stuff on the entrepreneurship track. That led me to some of the side hustles that we'll get into. But originally, first little side hustle that I had going was I had an eBay business. Pat's younger brother, Luke, helped me out with that. Still super appreciative of that. Luke was awesome. We had a good thing going. And that company, I would go. I started off selling chi hair straighteners. Clearly, I don't need the hair straighteners, but I found a contact overseas to ship me chi hair straighteners, and I was getting them for I think like $30 or $40, and I was selling them for 70 or 80 on eBay. And then one thing led to another, and started buying storage units, and then just selling on eBay, Amazon, and then officially started a company called the Trading Express, and then was taking things in on consignment for people. So then people would bring me things, I would sell them for them. That transition. So I did that for a few years. And then when I graduated college, went out to work for a pretty large Fortune 100 company. I was an operations consultant for them. And then decided to move to Florida, which is where I am now. And my fiance and I started a beach body. Well, she, through some friends, got started in beach body. So then we had a beach body going this into a Fashion Hill, which was a LuLaRoe company that my fiance and I ran together. It was super successful, super fun. I'm sure Pat will have some questions or stories about that. That was a fun time in life and a really cool experience. And then that transitioned into, with actually a bunch of things, but into a duplex. So we have the real estate piece that kind of helped leverage me get into first investment from there. And also currently in a sales role for a Fortune 500 company. So all of those kind of led to, I guess, built up. So it started selling a couple of chi hair straighteners on eBay, kind of rolled into other businesses and other side hustles. And then one thing just grew to another, and now love the company I'm with now, and really just love where my network is going and growing, I should say. So yeah, kind of a long-winded answer, but that's got kind of a little bit of my background.
So looking back to your college experience, you said you got involved with entrepreneurial and business classes. Did you find that the classes attracted entrepreneurs, or did it grow entrepreneurs? Was it able to create entrepreneurs, or is entrepreneurial, is that a skill that you can learn in college? I guess that's what I'm trying to get at here.
Yeah, no, fair point. To your point, I think that's like a two-part question. No, I don't think it fostered any entrepreneurial minds that weren't previously looking to go like the entrepreneurial route. I think it was more engaged on like actual like entrepreneurial accounting, where like in traditional big business management, you're doing like accounting 1 and accounting 2, and that's kind of more engaged towards like running like a corporation and managing a balance sheet, where it did a lot of like entrepreneurial accounting, so like how you're going to file as a sole proprietor, or so it gave you a lot more like how to's. But even that, I would think that could be consolidated. But no, I don't think it fostered anybody that wasn't an entrepreneur. I think it just helped people like myself get a little more structured and cut a little bit off the learning curve of just different tax advantages and things like that.
That's great. That's great. I want to touch base on that first business and kind of really dive into what you learned out of that, what you took away out of that, and kind of how that's shaped you now, 10 years later, and how you look at business and think about financial independence and being able to work for yourself.
Yeah. I think so. That's a super exciting topic. I personally think multiple streams of income obviously is the way to go. The three of us, I think, are in agreement on that. I think so everything that I did prior to now was super labor intensive. So my eBay business, the Amazon business, the consignment, the clothing company, everything that we did required a ton of my time. And so my paradigm kind of shifted towards, I still need that income, but taking up a ton of my time. So that kind of molded, we haven't touched on this yet, but I'm really big into trading and cryptocurrency. And that provided a lot of freedoms and financial flexibility to be able to add that into one of the income streams. So Pat and I have a company as well called Side Flow, where we basically trade, we swing trade the stock market and some cryptocurrency as well. And so just added income streams that aren't requiring a ton of my time. As we all know, our time is the most valuable thing that we have. So I just try and maximize capital without requiring as much of my personal time.
Yeah, that's a great answer. And I think that's kind of where we're all at right now is trying to build more of that passive income. I think when you're first starting out as an entrepreneur, you kind of go for that low-hanging fruit, not saying that it's easy, but that's all you have when you're younger is time, when you don't really have the money to kind of invest in some of these things. So in the beginning, the value that you have is your time, putting all that in there. And as we grow older and we've been able to save up some money, then it's how do I use my dollars to make more dollars? And I think that's exactly where we're all at now. So in regards to financial independence, can you kind of give us an idea of what that really means to you? Is it a lifestyle? Is it a number? And kind of break it down for us in the audience out there.
Yeah. So I think this is going to differ for everyone. I'll speak for myself personally. My number is 20,000 per month. So that means that I need to be netting 20,000 per month. I have some fail safes and the checks and balances that I have for myself to hold myself accountable. Just basic things. I get up early every day, just get into basic routines. Pat and I talk every morning. I'm always constantly checking the stock market, cryptocurrency, keeping my ears to the ground on places coming up, apartment complexes or flip deals or just things to add into the rental portfolio. So just staying active every day, just something to help work towards my goal. But yeah, just specifically answer your question, $20,000 is my personal number. But I think financial independence really is just the ability to decide if you want to work or not. And additionally, are you going to be able to maintain that? So are you going to be able to have the residual income to sustain whatever lifestyle that you're looking for. And I think that's going to differ for each person, but I don't think everybody's going to need 20 grand. And some people might hear 20 and be like, oh, there's no way to live off of that. So my personal number is 20, but I think it's whatever you feel comfortable at, whatever's sustainable, and whatever you can, live within that residual, live within your means off of that residual income that you're building. To that point, I will also say I only buy assets. I've driven the same car for the last 5 years. It's paid off. I don't have a car payment. I truly only buy things that make me money. I'm spending some money for a wedding and things like that. For the most part, I try and only buy things that make me money.
You're on mute, James.
I said, I'm with you right there. My wife and I are on the same track. Mentally, we're always just trying to buy assets. I have this tendency of somewhat guilting her a little bit in the future value of money. So whenever she wants to do something in the present, I say, is that worth X amount of dollars in the future? Just, to limit those luxurious expenditures today for delaying gratification for the future. I'm definitely with you right there. How did you come up with your $20,000 number? Is that something you deconstructed backwards, where you kind of put together, the lifestyle you wanted to live and you modeled it off of that? Or is there some other means by which you came to that figure?
Yeah, I factored a lot of things. Travel, where I would like to. I'm looking to build on the water right now in Intercoastal down here in St. Petersburg, Clearwater, Florida area. So that's not going to be cheap. So just basic cost of living needs, different disposable income to invest and grow in other revenue streams and other business ideas. But I just came at that numbers. I think that's enough residual income to be able to have verifiable income to get additional properties or financing for other business ventures, and enough to be able to invest in some things that come along the way. So kind of not an exact science, but I just think based on where I'm looking to go and what I need, I think that's ballpark what the number is.
So something I find super interesting is your involvement with, cryptocurrencies and NFTs and how you're kind of parlaying that, I would imagine, into maybe other cash flowing assets as well. It's all some sort of cyclical environment that where, the gains somewhere buy you assets for passive income elsewhere. Is that kind of how you visualize your involvement with crypto? It's like this huge upward potential gain that you can kind of deploy in something like real estate?
Absolutely. And I mean, it's on a small scale that already happened with the Dubai. I just flipped just real quick, ended up doing a flip deal on a duplex that I was planning on holding, but as we all know, the market's really crazy right now, and a neighbor's house ended up selling like 2 doors down for like 75 grand more than what I thought it was going to be worth. So long story short, ended up profiting like 120 off of a house. But what leveraged me into be able to getting into that house was prior crypto trades and stock trades that I had made that allowed me to save up that capital. And a quick story I'll share that is, I remember that when we were, Jesus, probably 4 or 5 years ago, we did not have a lot of extra money, and we would be like, oh, how much are you going to get? I'd be like, oh, I'm going to get like 1 extra Ethereum. I have like $200 extra on my check, and we're going to spend like 170 of it on cryptocurrency. And our bros are like, are you crazy? Like, you don't even have any extra money, and you're spending the only extra money on this fake internet money. Like, are you crazy? And so we had a lot of those discussions. But then it came back full circle, which was really cool, because then we got money to put down on a place. It leveraged us into our clothing business that we started. We actually, and that was something that I think we should talk about, how we started. We basically just took out a credit card and financed the entire business on the credit card. We didn't pay ourselves a penny until the credit card was 100% paid off, which happened to be super quick because it scaled faster than we originally anticipated. You just, for out there listening, like, you don't necessarily need to have money to get started in business. And I have a couple other, I'm sure we all have some ideas that we can share, ways that you can generate income streams that don't require a lot of capital. But yeah, so kind of got a little sidetracked there.
No, it's all good. I know it's really exciting when you get talking with like-minded people and you have all these interesting stories and ideas, and everything else. But to kind of parlay off of what James was talking about is one of the reasons that Justin and I had started this trading company that we're doing is because we've wanted to partner together on real estate ever since we were in high school. I mean, we've always talked about real estate, real estate, real estate. And we decided, you know what, instead of just going out, and we both have enough money to go and buy an Airbnb down in Florida, but you know what, let's start a company, let's start a business that we both invest a little bit of money in, and we'll grow that. And then we'll use our profits from that to fund our Airbnb business. Let's start another business for our other business. So now once we have the Airbnb, we have a successful company that funded it. Now we can continue to fund that and fund more and buy more assets with it. So we took an approach on, instead of just going out and buying something that we could do, let's take the harder road and create a business that's going to end up funding that, but down the road, that's going to pay off exponentially. And we both invested money into doing this with our crypto returns from the mini bull run back in May. So it all kind of is feeding each other, and extremely exciting. And it all comes down to just investing that little bit every time and having that long-term plan. So I love what you do, when you talk to your wife about all that, because those little investments can pay off down the road if you're thinking far enough ahead. So
That's true. It definitely all adds up. I mean, it's a progression of time, and it's time in the market kind of thing. And when you're working at it long enough, you're going to build up that asset pile that's going to either be growing in value that you can collateralize for additional assets, or kicking off cash flow. And I think that's one of the hardest things for people to start right out of the gate is a business. A lot of people get into real estate because they think it's going to be the easy fix to financial independence. But what a lot of people don't realize at first is that it takes a lot of capital to get into real estate, unless you're syndicating or you're doing a whole bunch of highly leveraged deals, or you're wholesaling. But as far as like buy and hold, passive mailbox money, it takes capital investment. And what you guys are doing, you're building that business that's throwing off that money that you can reinvest. So I think that's one of the more difficult things for people to grasp and get a hold of, because you really have to make a bet on yourself before you start making bets on assets.
Yeah, absolutely. Yeah, I think that was it too. Just always paying myself first. Like that Ethereum example that I gave before was an exaggeration. Like I was like, I know this is going to pay off one day. It sucks right now, especially when you only have a couple $100 disposable income to spend, 50, 70, 80% of that investing, even though we weren't really seeing any immediate returns at that point. Took a little bit of guts, but it paid off massively. We've learned so many lessons, probably more from our losses than the wins, but the wins are super fun. But we learn a lot from the losses and try and adjust strategy, and just make better decisions moving forward. Profits off the table always. We learned a lot of lessons coming along that I think some of them you have to learn the hard way. Greed and FOMO will get you losing a lot of money in the markets. So just learning those tough lessons through just being diligent and systemic on how we approach trading and growth and things like that.
Well, let's get into that a little bit. I know that every other podcast you listen to, 99% of the time, it's going to be those wins and those home runs that people knocked out of the park. And it paints this super easy picture to investing. But what you don't learn is, when you peel back the layers to the onion, is there's a lot of lost money, a lot of wasted time, a lot of defeat. And all of that is it's not a negative. It's a positive, because it's an experience for me to learn from and build upon and grow afterwards. So, I know looking back in my investing, I've made countless terrible investments, and they all came at the expense of money or time, but, I gained knowledge or experience as a result. I can just thinking of it right now. last year I bought right before the bull run with all the Bitcoin and cryptos and stuff, bought a whole bunch of domain names thinking that I'd be able to flip them later for a couple $100, a couple $1,000 a piece, based in, the crypto market. Probably put in $3,000-4,000, sold one domain name for like $200, and wasn't able to unload any other one. So it's just a total loss. I learned, stay in your lane. I know nothing about domains. I don't know, how to market them. I don't know what appeals. So that's just like one example of a loss on my end. Be happy to talk about, some of your investing lessons that you've learned where maybe things didn't go as expected, and kind of what you gained from that experience.
Yeah, I mean, I think that it goes back to what I was saying before, and just not having super labor intensive, high inventory managed companies. I got torched like several times in my eBay business, like coming up when I didn't have any money then. So like if somebody disputed a order or wanted to return, or like that would be like devastating at the time if they needed to have like a couple $100 return. And I was in college at that time, so I didn't have any real like money or ways to cover any things like that, or like any things going awry. But sorry, God, can you get back to the original question? I just had 1 second. Sorry, I got distracted. What was the original question?
No, you're good. Yeah,
tell us about a loss that
that
taught you a lesson.
I mean, I'd say the most devastating one I ever had, like that I personally remember, like just feeling agony, was like I just bought like, I don't know, call it 40 or 50,000 in crypto, which brought my portfolio up to like around a 6-figure position, and it was down like 35,000 in 24 hours. And I remember waking up and I was like, oh my God, like I was like sick to my stomach. Like, how am I going to make this back? Or like, and I legit for like 5 minutes, I freaked out. And I was like, what do I do? I literally lost my breath. Like, I was like, oh my God, what do we do? And then I was like, well, dude, I just bought Ethereum, Bitcoin Cash, and Bitcoin 2 weeks ago at 35%. And I thought it was a good deal then. So yes, okay, it went against me in the short run. Like literally, like I bought it and it crashed like the next morning. I'm waking up early in the morning, like, oh, let's see how my gains are. Like, nope, you lost like more money than you made the previous year. And I'm like, oh my God, I'm like literally sick to my stomach. And fast forward, and I doubled that. So I go through like the emotions, or just all the emotions of like sad, like then just trying to assess what's going on. And then I just doubled down. I was like, you know what? Like this still is a good deal. It sucks that I just had to learn this super hard lesson, but I'm doubling down. And then I did, and then the market's almost back at what it was now. I think so that was a long answer for like just staying disciplined and being patient, like especially in the crypto game. And we don't have a ton of historical data, but from what we do have, if you stay in position and ride it over the long run, if you zoom out, the 1 year, 2 year, 3 year, like it will be ascending. So that would be my takeaway, is just staying disciplined, patient, and not getting greedy too.
Yeah, I can 100% relate to that. To kind of go back to our whole beginning of crypto, Justin and I started investing during the 2017 bull run. So, I mean, I can remember having a portfolio of, $2,000 or $3,000 going to 7, going to 25, going to $50,000 in the matter of 3-4 months. And the whole time, you have that euphoria, and we're like, it's going up, it's going up. January, you get a dip, you're buying the dip. March, you get a dip, you're buying the dip. Next thing you know, you're holding bags for 3 years. And we held some serious bags for a really, really long time. And
we learned.
Too long, but those are the ones you learn, where it's like, all right, I get the euphoria of the FOMO and everything else, but to watch a portfolio, like he said, from 100,000 drop to 65, or from 60,000 drop down to 3,000. I mean, you take some hard lessons, like you said, waking up in the middle of the night, thinking about everything. But it makes you be more disciplined, makes you be more diligent with your money, learn to set up stop losses, all these great inventions out there. But also, again, if we would have just held on to everything that we had Because as soon as it started going up again, you're like, all right, I'm cutting my losses. I'm out of here. If we were to just hold on to everything, we'd all be singing, me and him especially would be singing a much bigger tune, and most likely would probably be sitting here with 7 digits in the bank right now. But those losses, like you said, they teach you the most valuable lessons. Anything that comes easy is going to go easy, and anything that comes hard, you're going to learn the most valuable lessons out of that. And I think that's 100% what the crypto space can do for you. I think there's going to be a lot of people learning some hard lessons sometime in 2022. And hopefully I'm not one of them repeating that. So.
Right. Yeah. I just got into the crypto game 2020. I'm not even going to say crypto. I only buy Bitcoin. And at that point I had learned that it's volatile as hell. It comes with the territory. It's part of what it is. So when we rode this last one up to 63, I didn't think it was going to drop, but before you know it, it drops down to 30. It's a 50% haircut. I think some of the other cryptos probably went down 60+%. And it's one of those things where you just have to have the conviction in what you're owning and be willing to have patience. For me, especially with Bitcoin, I know Warren Buffett hates Bitcoin, but I'm just thinking of a quote of his: price is what you pay, value is what you get. And when you're buying something, and especially real estate, like you're buying an asset that has value, you might get beat up a couple of years if the market turns. But if you buy a cash flowing asset and you're going to hold it for a long time, the odds are inflation is going to be your friend and the price is going to appreciate. So there's definitely a valuable lesson in there in patience and being a patient investor.
Yeah, it's funny you mentioned that. I joke with people all the time and say this is the only thing Warren Buffett's ever been wrong about. I still stand by that. Hopefully, I'm not on some cliff and cheers is this wrong? But I think he's going to be proven wrong on this one as it plays out.
Well, maybe that'd be an interesting direction to take the conversation, is kind of where we think investing to be going in the future as compared to where some of these traditional investors, Warren Buffett, Ray Dalio, all these, big guys who have amassed billions of dollars, they came up in an environment maybe that's different than where we are at now as a younger generation. How do you think about that? How big of a role is crypto going to play in the future? What do you think the significance of it is?
I think it's bigger than we can even conceptualize right now. I think as things start moving to the metaverse and VR, where just think of how many friends we have now that have VR headsets when they go there, and whether it's our normal or not, that's going to be the future normal, and their preferred currency is going to be a form of cryptocurrency. So it's going to be something on the blockchain. So whether it's Bitcoin or Litecoin or Ethereum, it's going to be something that's backed by blockchain technology. So I think that you're doing yourself a disservice to just plant your feet in the ground this isn't happening. It's happening. It's just a matter of are you going to realize it and capitalize in it in your own way, and it's going to be different for everybody. For me personally, I think that's diving more into the NFT space. I do love upside of a lot of the altcoins, but I still think there's a ton of great value in the big three, primarily in Ethereum. A lot of these altcoins like SHIB, Shiba Inu. I have some fun stories about that too, but SHIB had some wins off of that, but they're all on the Ethereum platform. I think just as history plays out, it's going to become increasingly more important, and for a lot of the reasons that people won't be happy with, but it's going to eliminate a lot of exchange rates. And foreign exchange is a huge global industry right now, so you're going to get a lot of pushback from that. But what it did, it inherently is a double accounting balance, which is what our current system is based off of. So it inherently does what our current system is doing, just much more effectively, and actually much more efficiently. So I just think that it's going to be the way of the future in not some capacity, in every capacity. Just think of, you're on your phone, you have Apple Pay and Google Pay and Android Pay and all these different things. What's more conducive with that, like your fiat currency, like banking system that used to like go to like withdraw money, or like cryptocurrency that's going to be able to have 10 times the encryption and operate faster and more efficiently. Like, I just think that's the way it's going. And it's funny because I almost think it's crazy that people don't see it, that I see it like as much as I know tomorrow is coming. That's how much I know, like everything's going to be blockchain based. Like, and it's going to, anywhere that the efficiency of blockchain can be used, I think it will be used. It's just a matter of how long is it going to take to get there.
I completely agree with you. And I also think sometimes that people don't see the power of how it's going to help the unbanked. I think that's really huge. There's billions of people out there that don't have access to a banking system, and cryptocurrency, Bitcoin, Litecoin, Stellar Lumens, even Cardano is all going to give the unbanked the ability to pay back and forth. But moving into the digital era, like you said, with games and now these NFTs, soon people are going to be living in these digital worlds where they're going to have a digital house. And in their digital house, they're going to have their digital artwork, their NFT or their avatar, or whatever, like specifically Decentraland, where people are buying up virtual real estate and virtual assets, and they are paying real dollars to have these things. So, there's this whole space out there that you can invest in, and you can own virtual real estate, which it sounds ridiculous. It really does, but it's happening. I mean, we've talked about investing in virtual real estate and buying up plots of land in virtual, inside virtual games, and all of that, and paying people to build houses and all of this stuff inside here, because it's going to happen. It's not if, it is when. And I think it's going to be a lot sooner than people think. And there's going to be a lot of people that said I always knew it, and a lot of people that wish it wasn't happening, but it's going to happen. And the sooner you get on board, and you don't have to go all in, but the sooner you get on board, you're going to be a part of the people that are going to be in that new wave. I mean, really if you just look at today in the news, and I know we don't really want to talk about news too much, but if you look back over the last couple of years, every time that any of the big banks came out, JP Morgan, Morgan Stanley, any of these guys were talking about, how Bitcoin's going to zero and it's intrinsically not worth anything. That's what they were saying on TV, but behind the scenes, they were buying up Bitcoin, and they were buying up these assets and trying to get a trading desk and get an ETF out there to push on to retail investors who didn't want a custodial hold their own assets. So the entire time they're telling you that it's worthless, they're buying up massive amounts of it. So I really think that kind of goes to show that it's going to be here for the long haul. And the fact that all these large governments are against it means most likely that it's good for, all of us.
So one thing that I think is super interesting is banking the unbanked. If you look at El Salvador, they, adopted Bitcoin as currency, and more people are transacting through, it's a state-sponsored app, but nonetheless, they're transacting through the Chivo wallet than actually have bank accounts in the country. Like, people who could not have bank accounts are now transacting in the economy digitally. But before that, they were just doing cash and coins. But now they're officially banked, and they're not having tax implications for buying coffee or, selling pupusas or whatever. So I think it is revolutionary. Something is, on the horizon changing. So it's definitely something to educate yourself
on. Unbanked is it hedges these underprivileged countries from inflation or hyperinflation, to where their dollar is just significantly less, or valued significantly less, like through no fault of their own, just because their economy is bad or they don't have good government leadership. So I think it kind of globalizes it. I know people don't really like that word, but globalism, it's coming at some, we're basically already there, but I do think that, like I said, it eliminates a lot of the foreign exchange issues. And then from an efficiency standpoint, that's really been the only big pushback that I see, is people really taxing on the grids. But I think when you look at alternative energies and I think just as technology evolves, that it will become increasingly more efficient and less taxing on the grid. So it's just my 2 cents on it. I think it's undeniably going to change every aspect of how we live, even down to simple things like inventory in grocery stores and things like that, and how you're going to be able to tie the blockchain technology to really create new positions for the people that understand it, but and eliminate and consolidate some positions that are currently really labor intensive right now on the labor taxing on these stores.
I agree. I agree a lot, and that kind of segues us into this next part that we were, looking to get to, is surrounding yourself with, like-minded people, and how your network really helps you in growing and getting to, that form of financial freedom and financial independence, that we're all vying for. So, tying that all in, can you give us a little idea of how your network that you surround yourself with, is helping you get there?
Yeah, man, I think this is super important to talk about. And it's actually, it's a close subject to me, because I think as you go through growth, you kind of maybe outgrow some of your closest friends, which was super tough. Me, Pat knows I get along with everybody. I just super personable, fun, like to get along with everybody. But it comes to a point where, especially as you get older and you start looking how valuable your time is and how your time is being spent. And not to be cheesy, I know everybody says your network is your net worth, but it's true. And to that point, 5 to 7 years ago, like I was rolling with a different set of friends that I probably would be going out during weeknights, or, certainly not discussing like business ideas or anything like that. But come full circle, pretty much since I relocated to Florida about 8 years ago, I've just been super laser focused on just growth with my fiance and I, both personally and together. And then, when I just look at my circle of friends that I had before versus my friends now, and not that everything's money based, but like just to bulk, I would say like previously my friends' average income was probably, I don't know, somewhere like 50, 70, 80, something like that. And now I'd say my 5 to 7 closest friends all make well above 200, 300, 400 and more than that. And so when you're surrounding yourself with people, you're having different discussions. It's more growth or opportunity based. It's not coming from a place of like jealousy. Like I make the least out of all of my closest friends. I love it that I learn from them and get tips from them all the time, different strategies they're implementing, tax advantages, there's for so many reasons, everything changed. The discussions changed, the things that we do change. My vacations changed. I'm getting married in Dominican Republic next month. So just everything changed for the better, but it was tough and you had to go through a growth process. And it's not like I wouldn't talk to any of those friends. I would love to catch up or see how they're doing, but it's just on my day-to-day interaction, the people that I'm speaking with the most, it's the Pats, it's my other friends. It's all business and growth minded. And we obviously catch up on what's going on in their personal life too. But it's just different conversations, but it's opened up so many better doors and allowed us to do fun things that we otherwise wouldn't have been able to do. So I think that's, if anybody takes anything away from this, like your network and you're hanging out with is going to directly impact the trajectory of your life.
Yeah, I couldn't speak more highly of that, because the same thing has really happened with me as well. I've seen over the progression of about the last 5 or 6 years we've invested in real estate and been spending majority of our time investing in ourselves. And, one of the only people, or one of the very few people that I get to have those conversations with on a daily basis is Justin here. And we talk about business ideas and everything all the time. And that gets you motivated, because, it's so nice to get the three of us together like this, to be able to have a conversation, because I'm sure in a room full of people, you're usually the only one that's consistently, or one of the few that is consistently thinking about these types of things. And it's so nice to know that, you got someone to talk to and you're not the only one, and it helps push you along. And I think that's the whole point of this podcast, and what we're trying to do and bring to people is to show you that, you're not the only one out there. If you're, trying to get towards financial independence or financial freedom, that if you surround yourself with one, you only need really one or two people that are going to hold you accountable and push you. In just a few short years, you can surprise yourself with where you're going to end up. And, I just think that is great. I really want to, James, you want to chime in there at all?
Yeah, I was just going to say, people definitely need to be comfortable with being uncomfortable, and surrounding yourself with people who have gone up a notch above you is an uncomfortable thing, because you're going to feel kind of like you're not there yet. And especially with those that I see wanting to get involved in real estate, they're super intimidated to go to the meetups because they haven't done their first deal or something like that. But it's really important that you surround yourself with people who have the same ambitions, have the same goals, larger ambitions, larger goals, because it's going to reflect upon you, and you're going to change your goals, not necessarily to be bigger, but you're going to see how you can adapt them to your purpose that fits, what you want to do for your life and financially. So definitely, I think it's important for you to learn how to, be comfortable being uncomfortable.
Yeah, absolutely.
Exactly. Well, I think this kind of ties in to where we want to head to next is there anything that is there a book out there or a podcast out there, or any particular person that has really struck a chord with you, that kind of changed your way of thinking about financial independence and what it means to hustle and go and get out there and go after your goals and dreams?
Yeah, I mean, I have like your standard like 7 habits of highly effective people. I think 10x rule is good. I think all of Robert Kiyosaki's Rich Dad Poor Dad series is super just really useful, and I'll touch on that too. So I don't necessarily have a rich dad poor dad, but my dad isn't like a crazy businessman. And funny enough, he owns his own business. He owns his own appraisal business. He's not like a crazy businessman, and like I would say his ideologies are more like in line with like the poor dad, not like they live a fine lifestyle, but just he's more in line with the poor dad mentality. So I don't really have like not anybody that's famous to follow, but like I've like followed Grant Cardone and Gary Vee. There's another there's one really good what is it? It's like the Total Money Transformation, I think, that he's the author of, and he's a super conservative guy. He
is it Dave Ramsey?
Yeah, Ramsey. So that's not really my cup of tea, but I think that is a very clear-cut, structured way of getting debt-free. We didn't talk on that yet, but I really do think that's super important to talk to. Like getting debt-free, I think you asked like for something valuable to leave. I think that's the ultimate, the best tip that I can leave. Like no matter what you have to put yourself through, just figure out how to get debt-free. If you need something systematic like the Dave Ramsey approach, then like do whatever you have to do that. I didn't do that. I fortunately, just through trades and different things, and was fortunate enough to get a good job, I didn't have to go that route to do it, but it has changed my life and changed just like debt weighs on people. Like it weighs on your psyche, your just overall, just everything. Just debt is just really hard on you. So, and I think that we don't, our current systems brought up, we don't emphasize enough on how bad debt is. And I'm all for good debt. Like if we're making some money on it, absolutely. That's the only kind of debt that I'm okay with. So I'm not completely anti-debt, but if we're having debt, then it's producing us an ROI. I'm not going to go debt for anything.
Absolutely.
But yeah,
I think that Dave Ramsey, he's a great place to start, for your financial independence journey. He's probably not your endpoint for people with certain goals, but I agree 100% with your debt. My real estate debt, I don't pay two thoughts to because it's paying for itself and I don't even think about it. Credit card debt, I'm paying off after every transaction because, it weighs on you. I did use some debt to buy some Bitcoin. that weighs on me because that could go either way real quick. You guys know that. So even though you buy assets with, that I would lump that into the bad debt category because it's not real estate. But there is definitely an emotional part to it because you think about it every day and it weighs on you, and it constricts your ability to think creatively beyond that debt. So I think getting yourself into a good debt situation is definitely step number one for financial independence.
Completely agree. Absolutely, completely agree. From a guy who refinanced his house and bought Bitcoin at the peak and then had to ride that out, I can definitely say that weighed on me for about 3 years. So if you're going to invest or get into debt, make sure it's good debt. So yeah, I just have to tie that one in there because everybody says don't do it. And of course, nobody knows best but yourself. So that's another one to chalk up for the hard lessons there. But I completely agree. And I think there's such a misnomer out there about debt. I know I've had tons of people on my Instagram arguing about, assets versus liabilities. And if you have debt on there, no matter what, it's a liability. And I think we can all agree good debt is something that pays for itself and generates cash flow. And bad debt is something that you personally have to pay that generates no income or no value, like a car or anything like that. I mean, and it's nice again to have those like-minded people that think kind of the same way when it comes to debt there. So man, this has been an awesome conversation up to this point. I love the book choices that you got. I think we're all really into the same kind of guys out there and have the same kind of thought process. Justin, for anyone out there and that you kind of want to drop a last little piece of knowledge on, is there anything else that you really wanted to touch on to teach people or tell people about, your financial independent journey, where you're going, where you're headed, what's next in that journey? I think they definitely love to know.
Yeah. What's next for me personally? In contract on a 5-unit in St. Pete. Now, obviously scaling Pat and I's trading company. Obviously, I have a full-time career as well. That's going really well. That's my main thing. So I think equally important to touch on is just that's my main thing. I do all of this outside of business hours. So, and I think if you really dig deep and look at yourself in the mirror and say, can I do more? You can go work your full-time job and do this after. I did it. I did it and continue to do it, and will continue to do it as I need to. But so I think for me, just acquiring more units, scaling my trading, crypto's going great right now. So just a lot of really good things going on that. And then I really like the NFT upside right now. So Pat and I are just now diving into it. We're going to deeper layers of diving into it. I think that's going to be a huge piece of the future. We have some really great artist friends that we work with. So I'd love to get some collabs going with them. Pat and I put up the funding. They do the artwork piece. We help them with marketing, growth, things like that. So I think that's where it's going. But the things that I would like to leave that I think for just people getting started is I think just try and find things where you can generate income without requiring a lot of capital from you. So obviously we're all in real estate, but that does require a little bit of at least basic knowledge and a minimal or a minimum amount of capital to get started. But what doesn't require, you can do Amazon arbitrage just real quick at a high level. It's basically you find a item selling for $300 on Amazon and you can find it in the store at a Home Depot or a Lowe's for say $150 or $200. There's apps that you can get on your phone that helps you identify those deals. I think that's something really great to get into when you're just first starting off. I think NFTs, figure out cryptos, figure out how to get on the DeFi stuff, figure out how to get to some of these, because a lot of these aren't expensive and you can have massive returns for a 20, 30, 50, $100 piece of art, and you may be selling it for 1,000 or 2,000% returns, not that far off in the future. So I think that's really big. And then I think the Airbnb management is really big. So if you don't have any money to go buy an Airbnb right now, go find people who have properties that are either having trouble finding tenants, trouble finding people to rent to, or just are tired of managing their own property, or whatever the case may be, and just find people that will let you manage their property. That's your foot in the door. It's going to give you the experience of at least managing a vacation rental, maybe not quite the same requirements as like an actual rental, but it's your foot in the door. It doesn't require a lot of capital, and it's something that you can easily scale, assuming that you do a good job at it. And it can be super lucrative too. So I had friends down here making $5,000, $10,000, $15,000 a month that owns 0 properties. So you don't have to own a ton of real estate. I like to own the asset, but who knows, maybe just managing other people's is better.
Arbitrage, that's a great opportunity. Generate that cash flow, and then you can buy equity in other assets and businesses as well. So you got to start somewhere. And I think those are all great examples of how to get into something with little investment and look for a great upside and good ROI. So Justin, how do people get in touch with you if they want to reach out to you, if you had something insightful that you dropped here and people want to follow up?
Yeah, you can. So primarily do a lot of my business on LinkedIn. That's pretty much where I do most of it. It's I think it's Justin Hill Business Executive. It might be LinkedIn Justin Hill Business Executive. I think you can find me on Facebook as well. I need to do a better job of being more active on social media. That's something that Pat has vowed to hold me accountable for. So I'll be more available to people. But yeah, feel free to reach out. You can find me on LinkedIn, Facebook. I have an Instagram and I'll use it too much, but yeah, feel free if anybody has any questions, anything. If I can help out in any capacity, feel free to reach out. I'd love to help people however I can.
That's great.
I appreciate it. It was great having you on, Justin.
Yeah, thanks for having me, guys. Good luck. Look forward to doing more in the future.
Absolutely.
Awesome. Have a good one out there, guys. We'll talk to you and see you next time.
Thank you for listening to the Real FI podcast, where you learn from the investors that have lived the hard lessons for you. To connect with us during your pursuit of financial independence, be sure to join our community by following us on Instagram or emailing us at info@therealfi.com. If this content made you financially, mentally, physically, or spiritually richer, please make sure to leave us a positive review on your preferred content platform.